You are welcome to Financial Analysis in 10 minutes, and in this video we want to look at the income statement analysis of GTCO for the year 2023. I want to look at their financial performance, and I first need to say this: all amounts are in thousands of naira. I want to believe that this statement should not be new to you, especially as an analyst, an investor, a business analyst, as a stakeholder who is interested in the numbers. So let's move on. These are the key performance indicators that we are looking at: the total interest income, the fee and commission income, then we look at the interest expense, then the loan impairment. But quickly, let's look at the income statement itself. Let's look at the table. We can see that interest income of financial assets gave us a total interest income of 550 billion, and we are comparing 2022 to 2023. The reason why it's like this most often is the numbers by themselves does not really make sense. You can't really make any decision by themselves. If you just imagine having 531 billion, you say, what does it really mean? But you need something to compare with. That's when you know whether the company is performing well or not, when you have something to compare. So it's either you compare with a prior year or you compare with a peer company, a company that is of the same market capitalization or that they fall into the same category. So that's how one is able to make decision. But in this case now, we are doing a comparison with a prior year, which is 2022. We are looking at 2022 to 2023. What's the difference? So as we can view it here, you can see the variance, which is the difference between the two, then the percentage change. But let's look at the key percentage change, which is the loan impairment. The loan impairment charge, you can see it's increased from 11 billion to 102 billion. That's 758%. That's a spike. That's huge. You may have to visit note 9 in the annual reports. Note 9 of the annual reports is where you see this. And if you want me to cover, you want a detailed report, you can drop a comment in the comment section below. Let's have a detailed report, but this is just financial analysis in 10 minutes. Then we come here and see another spike, which is in the other income. Other income, I need to say this: in 2022 it was 68 billion, and in 2023 it was 449 billion. And other income, it is the forex revaluation gain. It is unrealized gain, but just like the federal government told all the banks that they should not pay dividend out of this income. They should not, because it is called an extraordinary item. It only happened because there was an exchange rate difference. You know what happened to naira? The value has been going down as against the dollar. So that was what really caused this spike. So it was 556%. That's huge. That's huge. So then the next one is, let's see the profit as well. The profits before income tax. The profit before income tax has a percentage change of 184%, while the net profits has an increase of 209%. And that's why you can see that the earnings per share moved in 2022 from 6 naira, this is approximately 6 naira, to 19 naira. It's because of this increase, this huge increase. That's the reason why the earnings per share also grew. And looking at it, projecting for the year 2024, it will still go up because of the devaluation of the naira that still occurred in 2024. So there will still be huge profits that most of our banks are going to declare. That's why as at the first half of this year, as at the first 6 months, GTCO had already declared 1 trillion in profits. 1 trillion naira in profits is because of the FX gain that you can see here, where I'm pointing at. So we expect more in 2024, and by the time it's out, we're going to do the analysis and drop it on this page. So if you're interested in analysis, you are Interested in financial analysis of Nigerian companies, Fortune 500 companies in the world, will be dropping financial analysis in 10 minutes. So quickly, let's look at the gross earnings. The gross earnings simply means all the earnings throughout the year, throughout the financial year. So the first one is the total interest income. Total interest income. Total interest income is synonymous to revenue. Revenue in other companies, but for banks, their own terminology is different. So their own terminology in the banking sector is different. So this total interest income simply means revenue, their total revenue for the year, which is 550 billion. Then we move to net fee and commission expense. That's 110 billion, while the net trading gains on financial instruments, that's 62 billion. Then the last one, which is other income, that's 449 billion, approximately 450 billion. And in total, their gross earnings is 117 billion. In the annual reports, they had a gross earnings increase of 120%. 120%. Just imagine a business making that is a good business. Now, looking at it, and one thing about Nigerian banks is they have a future. They have a future. And that's why you see someone like Femi Otedala investing heavily in Nigerian banks, in one of them. So let's quickly look at this KPI, which is total interest income 550 billion, just like I told you, is all amounts are in thousands. So 550 billion compared to the prior year. In the prior year, it was 325 billion. So which means there was an increase of 69%. An increase of 69%. That's good for GTCO. And if you look at the fee and commission expense, which means fee and commission income, other income aside from their major revenue activity, which is interest income, if you come in, one can easily see that it has an increase of 18%, 18.9%. That's good for GTCO. And if you look at the expense side, the cost side, the cost also increased. And I believe that this will even be a major concern for the management. This will be a major concern, especially this loan impairment. It's increased by 758%. Just imagine, from 11 billion to 102. That's huge. So I want to believe that the management of GTCO would have done something would have made the proper targets for the year 2024. And we'll wait to see the outcome of this year. But looking at their financial reports, looking at their income statement for 2023, GT is a good business. They are performing well. I'm sure that this performance is what GTCO PLC stakeholders will be happy with. Nobody will see this kind of income statement, especially looking at the profit from the year, because it is out of this profit, for instance, that dividend will be paid. To shareholders. So it's good for them. So it's a good business. Join us next week. The next company we'll be looking at is Apple. Apple is the largest company in the whole world, and we'll be looking at their profitability ratio. So just like I said, if you are interested, if you want more analysis like this, kindly subscribe and click on the notification bell so you can be notified whenever we drop videos like this. Till we meet in our next video, stay blessed.